Good evening, everybody. Just a summer evening here in Pittsburgh, not too hot. All right, tonight we're going to kind of concentrate on when it's time to close out positions or taking profits, both on the long side and the short side. The reason we're doing this is because I get a lot of requests saying, I know when to get into a trade, I just don't know when to get out. So this is going to be leading up to a one of our mini sessions, August 28th, Saturday, be the 1 hour or 90-minute mini session. And we're going to be concentrating on the most obvious using candlesticks. And then I am still developing all the things that need to be taken into consideration. We'll probably sometime in September, when it gets a little bit lousier in weather, we'll probably have a full day training session on when to close out trades. Yeah, Becky just put in the link for it. So that's the 40-minute or $47 session. So we're going to kind of orient. David, that's also going to be a part of tonight too. Yes. But it's all kind of taking in the fact of when we start seeing prices roll over, when if you're long, when it's time to come out, and the ones that show that you should definitely be going short. So here's that first part of that process, the market indexes themselves. This is why your bread and butter, your ABCs, your brick and mortar is knowing what a candlestick reversal signal looks like. And that's exactly why we've kind of narrowed it down to the 12 major signals, because there's about 6 longs and 6 shorts, one of them being the hanging man signal. So this is where you kind of observe what's going on in investor sentiment. First of all, when you're up here in the overbought condition, you start seeing indecisive trading, even though it hasn't shown anything that's telling you there's been a reversal. It should be at least alerting you to the fact that the investor sentiment might be getting a little bit indecisive up here. Then when you see a major signal, we know that there's just a very simple trading rules that the Japanese race traders have provided for us. If we see a major signal, like a hanging man signal, and remember, a hanging man signal is a small body with a big tail to the downside, and the true hanging man signal has a tail twice as long as the body. And that makes it very simple to know what to do next. If they open it lower and start trading lower, that tells you the hanging man psychology is hit. Now, what is the psychology behind this signal? The Japanese race traders tell us everybody's bullish, happy, happy, bullish. And then, oh boy, they get pretty nervous and they're relieved that they brought it right back up. Yes, it can have a small wick to the upside, but not major. Just a wee little teeny wick. But the fact that the bulls were nervous, then relieved by the end of the day, has kind of left a residue sentiment, meaning the next day when they open it lower and start trading lower, the bulls that were nervous on this day say, shoot, the bears are still here, let's start closing out positions. And that's what starts your downturn. Now, just to go a little bit further in our market analysis, you can see they came right down and hit off the 50 today and bounced back up. So does that mean that's a good place to watch for reversal? Yes. Oh boy, Jim, you might have to help HR. So, but what's the other element that tells us that maybe this is not the reversal? Look at your stochastics. They're still heading down. So that might mean there might be a little bit more choppiness. What are my indicators? On here, you've got the blue line. That's the 50-day moving average. Somewhere on here is the red line. That's your 200-day moving average. Now, the reason we have those on our charts is because everybody in the world uses those moving averages to make their decisions about their portfolio. The 34 is this gray line. That's a 34 exponential moving average. And the reason I have that on there is because it works reasonably well for showing support and resistance levels. Now here's the most important one for anybody that's new to candlesticks. The candlestick signals are the graphic depiction of everybody buying and selling. Basically your investor sentiment. The T line acts like a natural support and resistance level of human nature, kind of a Fibonacci characteristic. And there's a very simple rule. If you see a candlestick buy signal or close above the T line, you can stay long until you see a candlestick sell signal and a close below the T line. The T line, I could take everything else off this chart, keep the stochastics, the T line, and the signals, and I could trade very successfully. Anything else I put on the chart is just adds to the credibility of where reversals might be occurring. Okay, so now I forget what I would say. Oh, so you want to have everything in alignment, meaning you might not be reversing here, even though we're in a doji, because we're not in the oversold area. We have to see how it reacts tomorrow. Now, if it starts trading positive tomorrow, that's a good indication they were bouncing off here, but we don't want to go long with the idea we're going to stay long until we see it close back up above the T line. All right, so same scenario here on the NASDAQ. Now, we can, the green, this is the 3 T line, works in conjunction with the T line. And it also acts as an additional indicator that if you see the 3 T line closing below the T line along with price, that just adds a little bit more confirmation that the bears are now taking control. But this is where we use the visuals of candlesticks to kind of enhance our analysis. If we can see there's kind of a resistance level up here, and we're not going up very strong, now we're seeing a bearish harami, a doji, a bearish left-right combo, now a close below the T line. What do we need to see to tell us that this uptrend is in progress? We need to see it come back up, showing some convincing uptrend. But the fact that on, I forget what day this is. What is today? Thursday. Monday, they opened the NASDAQ lower. Now, right away, you can use the Doji rule. Doji rule is very simple. They're usually going to move in the direction how they open after a Doji. So the fact that they opened it down and took it down, but brought it back up, that looks like, man, maybe they're not selling off. However, the next day when we wake up and see that the pre-market futures are showing that they're opening it lower, you definitely want to be ready to execute some of your short positions that you had scanned for the night before and get out of long positions that were showing weakness. Now, today, as you can see, we opened lower and came right back up to the 50. Now, that's not a reversal signal because we're not in the oversold area. They may bounce it here, but as long as they can't get back up above the T line, we got to assume we're still in a downtrend, or we wake up and the pre-market futures are showing weakness, that means there's going to be more downside. So using that same philosophy, now I'm going to be jumping around here a little bit because of the number of indicators that we have to tell us when it's time to close out a position. For example, we've been long INVA. You can see what it's done. It's done a wave one, a pullback, a J-hook pattern with the evidence that they haven't been able to close below the T-line. It wasn't quite a meeting line, no. And it wasn't in the oversold area, so it would have less relevance. Yeah, we want to see a meeting line in probably the oversold area. So right now, what do we have up here? When is it time to sell? Well, if you didn't close this position out after seeing a Doji and then a bearish engulfing signal, what was the assumption after the bearish engulfing signal? That more than likely we were coming back to test the T-line. Get a Doji here. So what's the simple analysis at this point? Well, basically the Doji rule. If they open this positive and start trading positive tomorrow, that means our uptrend is still in progress. However, if they open it lower, the Doji rule says it's going to move in the direction of how they open after a Doji. You want to be closing out this position. Now, for option traders, this is what we're going to be going into with a little bit more detail on in our training sessions, is if I saw a bearish engulfing signal in the overbought area and I had calls, I'm probably closing out those calls because of the signal. Even though we haven't closed below the T-line, it tells us there's probably going to be weakness, and it may take a day or two or three for this to, if it does stay above the T-line, to come back up, but that's going to eat up a lot of your premium. Mish, that's what you can see basically from the graphics of candlesticks. And let me jump to one that did that exact thing. So if I, being long on this one, we had a bearish Harami that didn't close below the T-line. Now, what confirms a bearish Harami? A lower open. The only thing that would keep us a little bit hesitant is the fact that the stochastics are still heading up. However, if this had opened lower and started trading lower, what was that telling us? The bearish Harami was in effect, they failed at this level. It's time to come out of this trade immediately. On the other hand, when it opened here, this is the nice thing about the graphics of candlesticks, is as soon as they opened it, they started trading positive, which we could see was basically the green. So you don't close it out just yet. Still green, still green, still green. Now, had this opened here and started trading positive, where was the logical place to close out this position? If it came back down through the open, because that would immediately tell you that the bears were in control, because this is where the bulls started taking control after it opened. If the bears could knock it back down through that level, the bears were in control, confirming the sell signal. So I got a little bit off track there. This is to say, to answer your question, Mish, that if it opens lower and immediately starts trading higher, well, you're going to be able to see that based on the candlestick color. Okay, so here's examples of when to go short. That is your doji gap down up here in the overbought area. That's your bearish best friend. Reason we call it a best friend is anytime you see a doji gap down or a doji in the oversold area gap up, it's your best friend because there's two elements to that analysis. One, the probabilities of it trading higher are extremely high. And two, the magnitude of the trend is going to be extremely strong. So I often tell people, instead of trying to learn and become adept at all the signals and patterns at one time, pick out 3 or 4 to learn them very well. And the first one that I would go after to learn is the best friend signal, because it's going to produce high probability results. That is where you look for short trades. And I'll have a bunch more. They're all going to be mixed in here. So here's now going to the other end of the spectrum. If a shooting star in the overbought condition is a sell signal, is a shooting star in the overbought condition? Yes. FT, FT, FT. Have you not studied your 12 major signals? A shooting star in the overbought condition is one of the 12 major reversal signals. And what do you want to see, or what tells you it's confirming? If they open it lower the next day and start selling it off, that's confirming the shooting star signal. Number one. Number two, even more powerful, is your shooting star gap down, which is your best friend signal. Do you have to wait for the next candle to open lower and trade lower? Yes. Yes. Now that wasn't a real, I want to say, huge reversal signal, except you're up here toward the overbought area. The next day when they gap it down, that is your confirmation that if you were long, you close it out immediately. We saw that same thing, and I'm really jumping around, over here on Rutro. Lithium, there's your shooting star. The next day it gapped down. Now anytime you see a gap down, even though it didn't close below the T-line, the fact that you had a shooting star gap down tells you right away the magnitude or the force of the sellers coming into that trade. You close it out. Worst case scenario, a couple of days it supports on the T-line and starts back up, you can always buy it back. But if you see a candlestick reversal signal followed by a gap down in the overbought area, that's the whole bread and butter of candlestick analysis. That tells you there's been a change of investor sentiment. So any hammer at the overbought area is a signal to close. If it confirms, and I'll get to some of those here in a second. Oh, laser was one of them. So there was your sell signal to go short. Now, look what happened down here. There was your hammer. And where did that hammer occur? In the oversold area. What was another indicator that you might start getting ready to cover your short position? Where do most people sell? They panic sell at the bottom. When they gapped this down and did a potential reversal signal, that told you to be a lot more attentive or starting to see some buying. So you had a hammer signal. You had a doji. Then today, you already were in an area that told you the probabilities were starting to go against you, that you should start looking to take profits and cover your short position. And that could have been at two places. One, if you know what a hammer signal looks like, you know what a doji looks like, then they opened it lower and traded down in the over, but then they came back up through the open. As soon as they came back up through the open, what color was this candle turning? It was turning green. And if it traded above where it opened, what were you going to have? A hammer, a doji, and then possibly another hammer signal. So if I was short and it did this today, I would have had a stop on half the position here. And then where is your ultimate place to take profits? Where should it not trade if the bears are still in control? It shouldn't trade back up above the high of that doji. If it comes up through there, just logic says there's enough strength in that reversal to say it's time to be out of this trade. When there is a chart like this, would you sell short at the end of the day anticipating the gap down? When there is a chart like this, would you sell short at the end of the day anticipating a gap down? Barry, I don't understand what your would you sell short at the end of the day? At the end of today? Shooting star at a high that is oversold. Are you talking about this right here? Oh. I usually want to see confirmation. However, if I saw this and then I saw all day long they were not bringing it back up, yeah, I might be shorting it on this day if I was watching it. Now, I probably might not have seen this as a short until the end of the day. So when I did my scans and I saw this, and what else did this trend tell us? Well, over here, when you started seeing indecision, they sold it off. Then they brought it back up, but what happened? You saw another sell signal, and where did that sell signal occur? Below this level. That told you the bears are taking control. So I would probably now look at this on the basis that I'm probably going to start thinking about shorting here. Maybe not on this day because it would immediately turn green, but probably on this day. Look at our double doji. They took it up, and where did they fail? I mean, this is why the graphics are so important to us. Look at your indecisive trading day that failed right at the T-line. Now, if it started trading lower on this day, I could probably be shorting. So maybe if I shorted a half a position, now I'm shorting my other half a position here. So the answer to that, unless I happen to have been watching this, which I probably wouldn't because there's 1,500, not 1,500, I've got 3,000 charts on my trading universe. I probably didn't find this until the end of the day. And what do I see? I see a best friend bearish signal. I'm getting ready to short this at some point in time. Now, when I see the hammer in the oversold area, Doji, I'm getting ready to cover that position. Okay. There are very few trade setups that I will put into action on the day that it occurs. Now, the best friend is one of them, and the other one is your bearish or bullish left-right combo, which I'll see if I can find one. Now, this is actually a left-right combo with the doji followed by a bullish engulfing signal. I probably wouldn't have bought this today because of the market in general. Can you enter? You could, but I would probably wait for it to close above the T-line. Why? Because what's our overall market conditions telling us? There's not a whole lot of strong buying in the general market. Okay, I'm getting way off track here. We're supposed to be done with all these charts by now, and we haven't even started. So here's another situation. When do you sell? Look what they couldn't do. Then you had your bearish left-right combo, and then they started selling it off. That's where you can go short. A left-right combo is one of your strongest signals, and the fact that you can see where the resistance level is, that just adds to the probabilities of going short. And then look at the same thing happened here today. If I had been short this, saw a doji, didn't really do anything, opened lower and started up, I'd have my safety stop right here, because logic says if they can come up through that level, this was indicating that things were changing, and this was proof that things were changing. Now it becomes a potential buy on positive trading tomorrow, because you do have a left-right combo, and unlike what we were just looking at, you didn't remember, this one did close at the T-line. If this opens positive, what's the two pieces of information that positive trading would tell us? One, it's confirming our left-right combo, and two, it's telling us the T-line's not acting as resistance. So anytime you start seeing in the oversold area, the first alert is a gap down. Would you elaborate on Jim Cooper's statement? Which Jim Cooper statement? Same scenario. Now here's one of the things, the question, yeah, signals are much more relevant. Just simple logic says, from the Japanese rice trader's point of view, that if you see a candlestick buy signal in the oversold area, more than likely that's where the reversal is occurring. If you see a candlestick sell signal in the overbought area, that's more than likely where a downturn is starting. If you see a candlestick buy signal in the overbought area, it doesn't mean anything. Or if you see a candlestick sell signal in the oversold area, it doesn't mean anything. It's just a formation day. So the simple basics of candlestick analysis is you see a buy signal in the oversold area, look for the reversal. And here's another thing that we're going to be going through when we look for when you have the probabilities of investor sentiment changing. Again, the simple philosophy of a Japanese rice trader was, where do most people sell? They panic sell at the bottom. What illustrates that reversal potential? The fact that they gapped it down and did an indecisive trading day after that gap down. Okay, these are all kind of reiterating the same points. But if you see a gap down doji in the oversold area, get ready to start taking, if you're short, get ready to start taking profits. So with that same philosophy, we're short T2. Notice T2 started with a failure to break out into new territory, and then a doji gap down. If I shorted it on this day and it closed up here, I have one simple strategy. If this opened positive and started trading positive, they weren't selling it off, you close it out. The fact that they opened it and immediately started taking it down started to confirm the fact that they were selling it off. Now, look where we are. In the oversold area and a doji. So we're short right now. So we'll have two exit strategies. One, if it opens positive and starts trading positive, we'll start closing out half the position. 2, if it comes back up through the high of today's doji, that's too much strength. After an indecisive trading day, you close out the whole position. 5 patterns are important when stochastics are over 80, yes. Yes, a pattern will usually break out when you're already up in the overbought condition. That's the difference between signals and patterns. The signal you want to buy, confirming in the oversold area. A pattern breakout will usually occur when you're already up in the overbought condition. That's why you want to recognize what a pattern looks like and what a specific signal looks like. And this is not rocket science. This is what I keep reiterating. This is merely taking or learning where the Japanese rice traders tell us it's time to buy or time to sell. So this is what I call observe the obvious. A bearish engulfing signal right smack dab at a resistance level that everybody is watching, the 50-day moving average. If I was long on this trade and it opened up and then closed here, I'd close it out, because that's telling you exactly what's happening at the 50. When would I go short? When they were closing it back below the T-line. Now, look what we had today. Is that a blue ice failure? Not quite, no. A blue ice failure is usually when they come down and quickly they go back up and test the 50. Now, you could consider it a blue ice failure because when they failed here, where do you think the next target was going to be? Back down to the 200. So we have a doji, but notice where the stochastics are. They're not in the oversold area. But what could also create the possibility of this bouncing from here? Well, look where this doji has occurred. Right at the same level it bottomed out before. So I don't think it would be heading up yet. But what's our safety stop? Where would we put a safety stop? Just above today's high, because logic says if they come up through there, yes, they were doing a double bottom, and maybe the stochastics are going to start curling back up. Apple. This is just more of an example of what would you be doing with this chart. Now, the whole point of candlestick signals and patterns is it tells you which direction something's moving with a much higher degree of probability. And in this case, which way is Apple moving? Pretty much sideways. You can't tell whether they're taking it up or taking it down. That's where you just say, let's come out of this one and go on to something where we've got a better perspective of what's happening. We shorted London Club. Because what is our simple rule of a 45 degree? Notice your doji gap up. Now you're in a 45 degree. And there's just, again, a simple rule. You stay long until you see a sell signal and a close below the T-line. Well, now they've closed below the T-line. Stochastics heading down. But today they traded pretty positive. Not positive, but they came back up through the open. So what's the strategy on this one for tomorrow? Well, if we wake up and see that they're going to be trading at positive, we're going to close out the short position because it's not moving in the direction we expect. Do you ever cover screeners? And yes, Ron, it's still summertime, so we've been kind of lax here for when it's nice out that you don't want to be sitting in front of the computer screens at night. But as soon as it starts getting a little bit uglier outside, usually after September 1st, in the members area, we'll do a Tuesday night or a Wednesday night, and a lot of times, sometimes both, where we'll do sessions on how you screen or how you scan for the best trade setups, where you might do a session on stop losses, might do a session on entry strategies to improve your probabilities of being in, the things that are all just kind of common sense elements to candlestick analysis. Oops, I didn't read all the questions. How do you analyze the traders' investor sentiment as revealed by candlesticks using multiple time frames? Is it better to focus on just market action or a single time frame? No. I use if I'm intraday trading, and I usually trade futures. So you can see what happened today in hogs. It started up, and then it came back down through the open, which told me right away they were failing at the 50. And I trade off the 10-minute chart. So when I could see they were failing at the 50, I could be trading this one pretty much to the downside most of the day because I knew they were trading lower after they failed at the 50. On the other, I'd say on the other hand, this one's trading up after hours. Soybeans. You can see what happened in soybeans today. They were down big. So if I was trading this off the 10-minute chart, there's the same signals. The signals and patterns are all the same no matter what time frame you're trading, because the simple definition of a candlestick signal or pattern is it is the accumulative knowledge of everybody buying and selling during a specific time frame. So these patterns work just as well on the daily, weekly, monthly as they do on the 1 minute, 5 minute, 10 minute, 15 minute, whatever time frame you want to trade. All right, I'm still way behind schedule here. You guys are going to be here until the cows come home. So Amazon. This is where the break of investor sentiment. Anytime I see an uptrend and they close below the T-line, I'm closing it out. Because the probability of an uptrend occurring after it closes below the T-line is dramatically reduced. I mean, big time reduced. So anytime I see something that's closing below the T-line, I'm closing it out. Worst case scenario, it can always buy back when it comes back up above the T-line. That's Amazon. So we have expectations coming out of a signal or a pattern. Look at our recommendation today on Santa was based upon the bullish engulfing signal. And what's a common price move of human nature? Whoops, I didn't scroll down fast enough. Now I forgot what it is. Oh, what happens? Look at our bullish engulfing. Uptrend, right through the 50, which was a possible resistance level. But what's the normal reaction of human nature? If they go through a resistance level, they'll come back and test it to see if that resistance level is going to act as support. In this case, the bullish engulfing signal told us right away that they were buying. Again, they were confident that the 50 is going to act as support. But look what happened today. It was a nice up move, but at the end of the day, they came back down into the area that it was supposed to be breaking out, and it closed down here. So if we are long, what type of signal do it create today? Basically a long-legged doji, which means if it opens lower tomorrow, we close out the position. It failed up here. To stay in it, it definitely needs to open positive and trade positive. Where's the entry buying point of a fry pan bottom breakout? Let me get to one. I can get to one. I'll get to one. I'll have to find it though. So using the same Doji rule, again, look where, if you were long here and you saw a bearish engulfing signal, that tells you it's time to get out. Because what did it, where was it topping out? Right in here. Also, if you can see the markets aren't showing a lot of strength, you don't want to see a sell signal. Now we've gone short because notice how they tried to take it up this day and reversed it, and then did a doji today on the lower open. Now, if we were thinking of going short again, we're adding to our short position. What's the doji rule? If this opens lower tomorrow, it's heading lower. And where do you think the first likely target's going to be? You just watch to see what it does once it gets down here to the 200-day moving average. Tesla. If you're in an uptrend and they gap it down or start trading down, what's that tell you about your uptrend? It's not there. Close it out immediately. And where is the best place to buy a fry pan bottom breakout? At the breakout level. It's right about there. But what else can we see would be being watched by everybody else as a breakout level? The 50-day moving average. And notice what it did at that level. It did basically a bearish engulfing signal in the overbought area. Now, had this opened positive and traded positive, that's where a breakout usually is likely to occur, up here in the overbought area. The fact that you did a bearish engulfing signal at a level that everybody else was watching and failing to break out, that's why we recommended this as a short today. And it could still be shorted based upon, if I can do this, this is wave 1, wave 2, and a failure, wave 3 could be heading down a lot further. So AMC is a failed fry pan bottom, pretty much. You can see where it should have been breaking out. Then your little shooting star gave you evidence that they aren't breaking out through this level, but if it started trading lower today, you close out the position. You can always buy it back if it turns around and comes back up through this level. Okay, there's a whole bunch here that, what have I done? Oh, here's another indicator of when to be out of a position. When you start, how did these things out here? When you see this type of move, kind of your bearish belt hold, that tells you they've failed. Get ready to go short. We did that same thing over here. Look at your bearish belt hold type signal. Notice what happened after that. It's been downward ever since then. So these are just little tidbits that allow you to see who's in control. The bigger this signal is, the more compelling. The bears are in control, the bulls are out. That's going to start your downtrend. Sophie, anytime you see that bearish kicker signal, that's a very strong trend indicator. Whether you're doing it to the short side or on our recommendation today on X-Air, look at your kicker signal, look at the strength of the signal. Today was not a good day in the market, but a kicker signal tells you there's something strong going on in that price move. Let's see, PLL, failure, right here. Just observe the obvious. Cure, there's your evening star, bearish harami, right smack dab at the 50. This is the huge benefit of candlestick analysis. If we can see a reversal signal right at a level that everybody else is watching, that gives us that much more head start to be ready to go short because of the failure and then confirming the sell signal at that level. SLS, look at your long-legged doji, bearish left-right combo, failure. So there was your fry pan bottom breakout. that failed. So if I was buying on this day and it closed back here, I'd close out the position because it told me exactly what was happening. The fry pan bottom was not working, close it out. Now it becomes a strong sell signal, but if it failed here at the 50, where do you think the next target's going to be? Down here at the 200. All right, so you can see we're pretty well scattered around. There's your shooting star gap down on lithium. This is why we're going to, and here's another one where there's your fry pan bottom. There's your bearish Harami in the overbought condition. So here's the question. Is this a reversal signal or is this just a down day in an uptrend? We don't know. So the logical thing to do would be maybe close out half the position, because as long as you're in a fry pan bottom and you haven't closed below the T line, you can stay long. There's your fry pan bottom. There's your breakout. There's your up move. Now, when you're up here, where is a logical place when you're in the overbought area and you're starting to move away from the T line? Where's a simple logical place that would tell you the bears are taking control? You put your stop right there, because if it comes back down through that level, where do you think the next target's going to be? Back here. Is it going to support there? Have no idea. Take your profits. You can always watch to see what happens once it gets to the T line. TVTX. There's your fry pan bottom. There's your message. Remember what a message is. A message doesn't look good. They gap it up and they do a big red candle. Now what's the difference between a message and a belt hold? Well, message was they took profits, but they're still way up there. What was the message? There was brand new, strong, bullish sentiment coming into this trade. What do we look for to confirm the message? We want to see when the selling or the profit-taking stops and the bulls step back in. Now you're probably at a 45 degree. I was going to segue right into something clever. I don't know what it was. That's just great. We did Excel. All right, so here's something that we've shorted Hood. Because what does investor sentiment do as far as price moves? Well, look at this. It took off like a scalded dog, ran from this level up to 85, and then where was the place to start coming out of this? Anytime you're that far away from the T line, we just have a simple procedure of going to our 10-minute chart and seeing when it starts. I hate that thing. It's enough to drive you a drink. You go to your 10-minute chart. If you're that far away from the T line, remember human nature. The further away you move from the T line, the higher the probability it's going to come back and test it. We've got the capability of using candlestick signals on a 10-minute chart to tell us, let's start taking profits up here because, again, we're already aware that it's too far from the T line. Is the Doji rule crucial for TVTX? Not really. Because you're not up in the overbought area. All this is telling you is that was an indecisive day in the in an uptrend. You're not at the top. And that's just a Doji day in the trend. Now I've lost my place. Oh. Why do I have that there? Oh. This has been a very good trade. There's your evening star signal. There's your close below the T-line. If you started going short, what was your parameter for taking profits? Well, you might have taken some profits here, but as you can see, they never got back up above the T-line. So if you're not coming back up and testing the 50, do you have a 10-minute chart you can show us on the high day of Hood and what to do? Mark, I'd have to go back and find it. Let me see if I can do it. But if you can see you're in a downtrend, where do you think everybody is watching to see if it's going to act as support? Down here at the 200. And what did it do today at the 200? Did a doji just below it. So where would you put your stop? Just above today's high, because that would tell you that it's confirming the doji in the overbought area, oversold area, and it's telling you they're buying here at the T-line. You mentioned the T-line acted like a Fibonacci, please. Oh, please briefly enlighten. It just acts like a natural. Fibonacci is natural numbers, and the T-line acts like a natural support and resistance level of human nature. Now, it's the 8 exponential moving average, and I tell people, anytime you do an indicator, I mean, I have people always say, no, you put the XYZ indicator on your chart. It works fairly well. You can, and as you can see, my charts aren't that cluttered. The important factor of anything on my chart is the signal itself, and then anything that would add to the confirmation of that signal. So as you can see, it doesn't take a whole lot to tell you what to do with that trade. Exactly, Mark. So here is the emotional factor that the T-line helps, or helped me with quite a bit. What happens to most people when they have a good profit in a trade? What's the first thing they think of? Oh, I better take profits. Or, boy, would I look stupid if I let this profit turn into a loss. And so people take profits just for the sake of taking profits. Well, if you become, let's say, not acclimated, custom, confident of the T-line rule that you can stay short until you see a buy signal and a close back up above the T-line, this is what tremendously helps your profitability, because you're not taking profits just to take profits. And you can sleep much better at night knowing as long as it stays below the T-line, I can stay short. Now, when you add that type of thing to trading, again, what's the biggest bugaboo of most investors? Their own emotions. So everything we've got on our chart and the way we trade is to keep as much of our emotions out of our trading as possible. And this is what I call observe the obvious. Something like Cure, we shorted this one because you could see it obviously failed at the T-line, I'm sorry, at the 50, closed back below the T-line, and which direction was this thing moving? It was moving in a downward direction. That just adds that much more credibility that when they came up and failed at a resistance level, that the bears are still in control. AMEH, a huge morning star or evening star signal, a double doji, closed below the T-line. What do you do with this one? You just stay short until you see a buy signal and a close back up above the T-line. There was your bearish flutter kicker signal. Notice, if I can make this, Notice you were in an uptrend. Look how far away you are from the T-line. That was your first alert. The fact that they opened it lower, gapped down the next day, told you that's where you close out the trade immediately. Notice it almost pulled back to the T-line and came back up. Well, what would be the worst case scenario? They open up positive and start trading positive. You could always buy it back if you thought that was the best place to have your money. But since that, when they gapped it down the next day, that became a bearish flutter kicker signal. And a bearish flutter kicker signal is a kicker signal that if you took out this little flutter, it's telling you you've got a strong downtrend. And how long do we hold on to this? Until you see a buy signal and a close above the T-line, with the caveat that the further away you move from the T-line, the more attentive you want to be to see a reversal. The T-line is effective on all time frames, yes. This chart could be a 1-minute chart, a 5-minute chart, a 30-minute chart, a daily, weekly, or monthly. It's all going to look exactly the same. All the indicators stay the same. Theo, I don't know what that means. An LMND. Wave 1, this is why knowing that prices move in waves help you with much greater precision. Say if that's wave 1, look, this is what we call kind of consider a failure. Look how it came back up, failed at the 50, and starting lower. So we shorted lemonade somewhere up in here, because if wave 1 and wave 3 are the same, it should end up down here somewhere. And NVIDIA, look where they started buying this one. Right smack dab off the 50. Now, if this opens positive tomorrow, let's make this bigger. What type of pattern is it setting up? Your bullish flutter kicker signal right off the 50. That's a very strong bullish indicator. Lemonade blue ice failure. Pretty much, except usually a blue ice failure has the 200 down here, and that's your next target. Mathematical fractal behavior. Natural phenomena exhibits the same patterns on all time scales. Yes, human nature is the most reliable trend indicator in the world. It's been around for hundreds of years, and it's going to be around for the next 100 years. I'm a meteorologist by trade. You see the same patterns all time space. Yes, and that's why the Fibonacci numbers are all the same. And human nature is the same. So because there's 12 major signals, let me go through some charts right now that look good. This is SFL. Look at your J-hook pattern that broke through this level. This still can be bought on positive trading. That's a trucking stock. And there's your scoop type pattern, and look at your gap up best friend. This one can be bought on positive trading, which would be confirming your best friend Doji sandwich, telling you this level is breaking out. Where do you think your next likely target would be? Probably back up here to test this level. For day trading and swing trading, what time frame chart do you use? Now that's up to each individual. I use, when I'm day trading cattle, hogs, soybeans, crude oil, my bellwether is the 10-minute chart. And then as I'm trading, if I see a 10-minute chart starting to set up, I'll flip to my 5-minute chart. That's right. Jace, write down in your journal what you should or should have not done. So now I'm way up here. Here's your best friend signals. Macy's. Look here, Doji, best friend gap up. What do you expect off of this chart? Probably a 45-degree. Coles. There's your inverted hammer, bullish confirmation. Kind of your a classic pattern, a fry pan bottom followed by a J-hook pattern. MRUS. Look where this broke out. This is kind of your bobble breakout. Now, a bobble breakout is a J-hook pattern that has definite resistance levels and breakout levels. So you can see the J-hook pattern. You can see obviously more defined that it failed at the 200 and then came back up through the 200. Yes. So that's why if Macy's had a strong report, now you can say, all right, that whole sector is being bought. Let's see which stock, which patterns look the best in that sector. How about stock trading and option trading chart frame? Again, that's still up to you. I usually, I'm a swing trader, so even my option trades are on swing trades, meaning 2 to 10 trading days. How do you know where to place stops based on T-line or stops placed on the candlestick pattern form? I noticed increased RRR on lower time frames result in losses. Does that mean that if you want to increase my RRR risk reward ratio, it's better done on higher time frame? Yeah, you can use a combination. Let's say if I'm trading hogs, I might be using a combination of a 5-minute chart and a 10-minute chart. So if my 5-minute chart looks like it's coming back through levels it shouldn't, then I go to my 10-minute chart and say, all right, is my 10-minute chart still tell me I'm in an uptrend? All right, so we always tell people learn the 12 major signals, but I also tell people at least scan through the other 50 or 60 and be acquainted with them. Not that you need to learn them knowing exactly what is happening, but you want to know, for example, look at our little scoop pattern. This one bounced off the 34. This is Aspen. And then this is a bullish pattern. It's called a 3 white soldiers. A big up day. The next day they open it back down into the previous candle. Then an up day. The next day they open it down into the previous candle. Then an up day. That tells you they're taking out the sellers as they go along. Adds a lot of strength to that bullish move. Has this moved too far? JP, I don't know. You always have to put the stock we're looking at because we just zip right along here. Can't remember which one's. Is it likely for Microsoft to retrace a bit going up again? Have no idea. Right now, it's just telling you as long as you're above the T line, you can stay long. TSP. This is now turned into 4 white soldiers. Bullish candle, opens lower, trades up. Opens lower, trades up. Opens lower and trades up. Not only trades up, but trades up through the T line, telling you you have a buy signal breaking out through the T line. Here's another thing to keep in mind. Anytime you see a big, huge spike, why is this not working? Oh, I guess back here is better illustration. Whenever you have that big spike move and you run into the bears, then it will usually flatten out for quite a while. And that's exactly what's happening on why we bought puts on Hood. Bah. Well, what's going on here? There it is. Look at the big spike, and then look where the bears came in. So what was happening here? Everybody's happy, 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 and then the bears come in. So now everybody doesn't know whether it's the bulls or the bears are winning, but usually when this happens, they've found an equilibrium. It'll pretty much trade flat. A belt hold, there's a description, Andrew. How do you identify extreme tops and final bottoms? I can see you are not using cycles. No. Oh, is it up after hours? No, it's not. I'm still trading Jace. A belt hold. Let me see if I don't have belt holds on here. A belt hold is when they gap up out of a trading range and then come back into the trading range. So if this had come all the way back down here, that would be a bearish belt hold. The fact that it closed up here tells us that's the message. Now we start watching to see when the profit taking is over. Again, that was kind of the same scenario over here. They took it up, pulled back, but the message was they took it up strong. Oh, Jace, that's just the difference between the bid and the ask. And then we watch to see when that profit taking is over. So that is one trading method, because this tells you there's been a change of investor sentiment. Watch for the profit taking to end. Mercy sakes, I've kept this way past. And there's your cup and handle. Look how they bounce this off the 50. Tells you there's probably more buying. Hershey, a belt hold. Boy, not really. A belt hold comes out of the trading range. This is still kind of in the trading range. How long were you studying charts during your early days, sir? I want to be an expert market action chart reader. That's the benefit. I started back in the, I don't know whether it was the late 80s, early 90s, and I came across candlesticks by accident. And I was the worst investor in the world before then. I was a stockbroker with Kidder Peabody, Oppenheimer, and Cowan and Company. And all I found out working for brokerage firms that they had no more idea about what made prices go up or down. And so when I came across candlesticks, when I started learning it, everything that hit me when I learned it was, man, this makes sense. So everything we do in candlestick analysis is just common sense, things that people tell you to do as far as how you should invest, but we never do it because of human nature. And that's exactly what candlestick analysis is. It analyzes what most people do, which is usually backwards, and it puts us in the opposite direction, or in the right direction. So this is the type of thing that we want to find, is when things are rolling over. Look at our double doji on Tigger. If this opens lower, that tells us we probably have wave 1, wave 2, going into wave 3. bean. Same scenario. Look at your big bearish engulfing signal failure at the 50, and look at your double doji. A double doji tells you they sold it, they consolidated, but they couldn't take it up, and they slam it again. Okay, Jason. No, this is exactly what you're looking for. Who was asking that? Jake? This tells you there's a change of investor sentiment. The sentiment told us we were in a downtrend as long as we were below the T-line. Now we've had buy signals that close back up above the T-line. Where do you think the first logical target might be? That might be one, but would suspect they could bring it back up to the 50. So we're looking for things that create a strong sell. Alcoa, as you can see, had your bearish best friend, a doji gap down in the overbought condition, even though it didn't close below the T-line. Remember, the T-line is just a confirming indicator. The signal is your most important analytical element. Anytime you see a doji bearish best friend, the probabilities are the sellers have taken control. And BTX, wave one, supported at the 200. Support, but look what was happening. There's your dumpling top, and now you're back below the 200. What do you think your next target's likely to be? Wave one, wave two, wave three down here somewhere. So everything we look at in candlestick analysis is just common sense. Where are the sell signals? Where are we to the T-line? When is it time to start covering positions? As you walk through it, everything you learn, you kind of think, yeah, that's very logical. And that's what helped me out quite a bit. Again, taking somebody that was the worst investor in the world, and now I pull money out of the market consistently, because every time I see a signal, I know what is likely to occur based upon human nature. Okay, I guess with that, are there any general questions on candlestick analysis? Oh, so we are going to be doing, again, on August 28th, we'll be doing a mini training to get people acclimated to when to be taking profits, when to be going short. Becky just put the link in. But that's going to just kind of get your mindset a little bit arranged so that probably 2 or 3 weeks after that, we're going to be doing a full day training on when to be taking profits, even though you might not see a confirmed sell signal closing below the T-line. It's just adding 2 plus 2 together. If you see the markets are selling off and you're starting to see indecisive trading, you got to ask yourself, all right, is it better to close out this position, or are my probabilities starting to, or not, or is the probability starting to turn against me, and are there better places to have my my funds? What's the best short signal to screen for? Jake, there's a bunch of them. Your bearish best friend, your bearish left-right combo, your bearish kicker signal, your bearish harami. And where they occur is also important. I mean, this would be a good sell signal, but it was even more relevant when it did it right at a level that everybody else was watching. If you have a large bearish candle back down through the T-line, should you wait for the close or cut your losses? Oh, John, cut your losses. Now, there's a lot of times where something like this, where would be a logical place if you were getting up here toward the overbought area to put your stop? At the low of the doji. If it comes down through there, that's telling you they're not moving in the right direction after the doji. I use TC2000 and I use Metastock. Both are good. Metastock is much more comprehensive. You can trade all markets, Canadian, European, Asian, and you also have can trade your futures off of Metastock, whereas TC2000 is just using American stocks. Under the general market conditions, you be looking to short? Yes. Now, not as much as when we started over here. Whoops. This day, say, all right, start watching, start adding some short positions, and then really, by this time, we already had a good number of short positions on and added a few more. So it's not like you all of a sudden go from long to short. Usually you're going to have a rolling over process. Oops, I didn't scroll fast enough on the questions. Which of your books explains sentiments revealed on candlesticks and talks about the Doji rule and engulfing rule? I think it's the high profit candlestick patterns. When utilizing options, do you prefer spreads over naked options? Steve, probably about 70 to 80% of my trades are spreads, just because of all the benefits of a spread versus buying calls or puts outright. And we can do a session again in the members area for when to use spreads versus options, or straight out options. How many charts do you look at each day to come up with your trading ideas? Phil, I've got a trading universe of stocks that are trading greater than $5 a share and trading more than 200,000 shares a day. That trading universe out of the 9,500 entities to trade is reduced down to about 3,000. And then I scan for the best, or the stocks that had the biggest percent price moves, either positive or negative. And within the first 100 charts, which would only take, once your eyes get accustomed to looking for the signals, probably less than 4 minutes, I'll come up with 15, 20 good charts. I put them in my bucket list. Then I go back through and spend another 10 minutes figuring out which ones of those are the best of all the good charts. I do credit spreads most of the time. I'm sorry, I do debit spreads most of the time because of the extra leverage. But if I'm doing credit spreads, they're usually very short term, like within a week of expiration. Do you look by sectors for sectors of short or just stocks? Jake, usually what will happen is when you're scanning and you find a bunch of oil stocks that are selling off, then you can pretty much assume that sector is being sold off. If you went long above the T-line after a gap down Doji and a strong bearish candle came back down through the T-line, should you close the trade? If you went long above the T-line after a gap down Doji and a strong bearish candle came back down through the T-line, when should you close the trade? Oh boy. You're going to trade on weakness. Now I had calls on lithium and I closed them when they gapped down, because anytime you see a Doji gap down, even though you're still above the T-line, I'm closing it out because that's a lot of selling strength. If I had stayed long, you get ready to close it out if it opens lower the next day, because that's still telling you the force is still in that direction. Do you have other formulas for scanning? Yes, they're all over our website, and they are all over. They're used at Metastock. They're used at TC2000. Think or swim. So all our formulas are all over the place, and they're on our website. I just don't remember how to get there. I think if you look on our Candlestick Forum site, if you look in the left-hand column, it will say TC 2000 formulas, and that's where you can find them. And the formulas are very simple, no matter what you're using them for. If you can say the signal, like a bearish engulfing signal is that it opens above the previous day's open and closes below, opens above the previous day's close and closes below the previous day's open, you can write that formula very simply. Is it not better to do credit spreads and take advantage of time? Yeah, that's up to each individual. Yes. Can a trader scalp the Forex based upon price action in relation to the T-line, or the Forex is too volatile? No. Candlestick signals are not for a specific market. Candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. Doesn't matter whether you're trading stocks, bonds, commodities, currencies, tulip bulbs, anything that has fear and greed in it. Okay, we can do some individual ones, just limit it to one. Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. I'll try to run through these real quick. Edit, I would be ready to go short. Look at your shooting stars. Now you're closing below the T-line. There's a gap to fill right down here. That would be my first logical target. Let's see, I think we did FSL. You can be ready to buy this one on positive trading tomorrow. DJ, stay long. Wouldn't necessarily be a buyer here, but as long as it stays above the T-line, you can stay with it. Lithium. If you bought on the 19th, you bought at date 19, price 1995, down here. Yeah, I would have closed this one out. Remember, it's not where you bought it. It's what's the price action doing. And right now you're trading back below the T-line, which tells you the probability is extremely strong, but it's now in a downtrend. GOVX, nothing great here. You're still kind of in a choppy sideways. PDYA. No, that's not working. Rite Aid. I would have closed this one out today. You can see there's no real strong trend to this, and they did a bearish engulfing signal up here toward the overbought area. I would have closed this one out. MSEX, Middlesex Water. I probably wouldn't be long or short this one. If I'd been long, I would have closed it on this day, and I wouldn't be buying back until you see a strong buy signal. I probably wouldn't be buying this one back until they broke out of this sideways above that level. Let's see. Did X. Marna, you shouldn't be long on this one. I don't know whether I'd be short, but I definitely wouldn't be long. We did edit, did Micron. If you're short, you can stay short. But I'd have a safety stop just above these highs right here. I think we did Tigger. Didn't we do Tigger? Tigger, you can be shorting this one because of the double Doji. Facebook is just a toughie to trade. I wouldn't be long or short. There's just no real good trend on Facebook. And Billy, you can stay short ever since your gap down. Now all you can do is stay short. I'd have safety stops someplace, like right up here. We did TSP, right? TSP you could be buying. Wayfair. Stay short. Cliffs. That's almost a bearish kicker signal. I definitely would not be long, and I would be shorting it if it comes back down through today's low, telling you the 50 is not acting as a support level. And NVIDIA, ruh-roh. NVIDIA has to open positive and trade positive to stay in it, or even to be buying it on the bullish flutter kicker off the 50. That's a Doji. This is pretty much what we call a McMuffin. Your Morningstar signal, right combo, followed by a Doji sandwich, or your morning sandwich is your McMuffin. This is a strong reversal, and this implies more upside. I would suspect your first target is coming up here to the top of the trend at the 200. I have a problem downloading your weekly videos. Once I click go to the download, there's nothing to indicate how to download. Can you please help? Email Abraham at Candlestick Forum. Jim did it down there below. GDRX, that's a nothing chart. I wouldn't be long or short. Ralph, I probably wouldn't be going short either. That doesn't really indicate any major trend one way or the other. GRTS. That one I'd be more apt to short because of the failure at the 50. First target, second target. And BNTX, this one I'd be more apt to short also, with the expectation they're going to take you back down to the 50-day moving average. NSA. Hey, boy. If you're long and have stayed long, it has to open positive and trade positive. If it opens lower, you're bearish engulfing, followed by a bearish Doji sandwich, tells you it's time to be out of that trade. It is an inverted hammer, yes. Want to see how they open this one tomorrow on Amazon. Alcoa, you can still short this one. Obviously, you want to be a little bit more attentive to bring bouncing back up. But the fact that they did an evening star type signal, best friend, and then another gap down, shows you they're probably coming out of this one, testing this level, which would probably coincide with your 200-day moving average. VNQ. Oh, that's a toughie too. Yeah, I wouldn't be long or short this one. There's just no direction. Same thing right here. Just no direction right now. Pfizer, there's your shooting star. Harami, if this opens lower tomorrow, close it out. Boeing, stay short. And AGFY, boy, you stay long as this one stays up above the T line. I'd have a safety stop just below the T line. How far do you look to determine turning points when price candle goes beyond T-line? Is there a criteria to look for as the price moves away from the T-line? Oh, how far do you look to determine? How far do I look when price candle goes beyond T-line? I don't know, Adele, what you're asking there. Just that if I see a buy signal to close above the T-line, the probabilities. Now, if it closes just below the T-line after a sustained uptrend, then I still have a simple criteria. It better open positive and trade positive on the next candle. We did BTX. Be ready to short this one on weakness tomorrow. Raymond. Oh, Raymond, I'll give you a call tomorrow. Sorry I've been so delinquent. I've been busy. But I'll call you tomorrow. Yes. Well, I don't trade them overnight. Now, sometimes if I'm sitting here doing something, and I see something that has a good trend to it that might continue, I might flip to my 10-minute chart and say, I'm trading this. But the problem with that is sometimes they go for 3, 5, 10 minutes without a trade, so it's pretty boring. But I will hold positions overnight. Now today I had shorted lean hogs, and it failed here at the 50, so I'm assuming there's probably going to be some more downside, maybe even all the way back to the 200. So I held on to those. Okay, Bob, let me see if I can copy this, and I will alert All right, I'll set that to him. GDRX, well, where does a shooting star occur? Bob, what's your email? Dave is asking that. This is an evening star. You could short it, but it's not an evening star. An evening star is a reversal at a top of a trend. And Corning, you could buy this one. There's nothing real exciting about it. You could buy it. You can see what your trend is. It's very slow. Cisco, that might be kind of your fry pan bottom breakout. I would suspect as long as you're above the T line, you can stay long on this one. Fastenal, nothing major there. I probably wouldn't pay too much attention to this one. I hate that thing until they break out through this level. Lena, that's why we try to keep these at 1. HCA, nothing exciting there. Boeing, we did. General Dynamics, I'd be ready to short this one on weakness, figuring that at least it's coming back to test the 50. And IBM, that one, you can see how it failed 3 times up here at the 50. You can short this one on weakness, anticipating they're bringing it back to the 200. Murin, there's another example of When they spike it up and then the bears take control, it'll pretty much go flat. So if you're short on this one, you stay short. Where can I find a video about stops during a live session? Oh, John, you go to our products and services. There should be videos available there. EXPR, you can get ready to buy this classic pattern, fry pan bottom J-hook. What's your opinion of using fundamental analysis in the determination of whether to go long or short a position? Or technicals are more than sufficient since they reveal the fundamental involved in a price action. Exactly. We're not buying fundamentals, and prices do not move based upon fundamentals. Candlestick signals are the graphic depiction of everybody buying and selling, and those are the people that are making their decisions based upon their analysis of the fundamentals. So all we're doing is analyzing what everybody else's research or opinions about the fundamentals, what their results are, what their decisions are. IRM. But the most important aspect of that statement is prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. Do you trade cryptocurrencies too? No, I've got too many things to trade already, and those are the ones that I already understand. Iron Mountain, you can get ready to buy this one on, again, the classic pattern. Fry pan bottom followed by a J-hook pattern. For some reason that doesn't come up over here, Andrew. I don't know why. And Adobe, all you can do right now is stay long as it stays above the T-line. I'd have a safety stop just below today's low. It shouldn't come back below that level. When do you use stochastics? Your stochastics are the result of candlestick analysis. When do I use them? I just use them to tell me whether I'm buying based upon that trend just starting or selling based upon when that trend is ending. Carnival. Nothing great here. If you're short, you can stay short. What about dark flow volume? Volume between institutions and mega traders, which supposedly we cannot see. I am being sold a bill of goods on dark. Yeah, dark flow volume is always built in. It doesn't matter that it's being done between institutions, because if somebody wants to buy 1 million shares of Apple, they're not going to go to the market to buy it. Whoever the institution is calls up Goldman Sachs and say, yeah, we're a buyer of 1 million shares of Apple. And they'll say, well, what price do you want to get it? And they say, well, if you can get it to me at somewhere between 146 and 147.50. So that institution goes out to other institutions, say, we've got a buyer of 1 million shares of Apple. Do you want to sell some? And they may spend all day going to 4 or 5 institutions, and one will say, yeah, we'll sell 300,000. Another will say, well, we'll sell 500,000. And then at the end of the day, when they've got that trade done, they average out the price, and that's where the trade is done. And then it shows up on volume. But it has nothing to do with, I mean, if you've got one institution buying, the other institution selling, it's not like it's that they're moving the market around. Why do some indices markets move after hours on very low volume? Why do some indices? Because they're the futures. For example, right now, YM, which is the Dow futures, there's not big traders out there. There's probably a bunch of, I want to say, small individual traders trading. So you can see right now the Dow futures are down 100, or if you could go to the Qs, oops, that's not working. Usually you can do the Qs. But it's, yeah, it's just small traders. If you're an institution and you want to buy 500,000 shares of a stock or an indice, you're not going to be able to find it after hours, so you don't trade after hours. Lab D, you could be buying this one. Yes, which means Labu is selling off. And you can trade after hours. I mean, sometimes when I'm bored and I'm doing stuff, I'll see, they're selling off. So what's my 10-minute chart look like? My 10-minute chart looks like I could have been shorting right here and making a good trade on the short side. Okay, I kept us way past bedtime. So with that, everybody have out. So mark your calendars. August 28th, we will do our first mini session again. They usually last. They're supposed to last an hour. They usually last sometimes up to 2 hours. But you'll get a lot more information. And again, what we do is on these mini sessions, kind of gives you a taste and an education of when to be doing something. And then usually once that starts sinking in a little bit, then about 2 or 3 weeks later, we do a full day session where you can really iron out all the details. All right, everybody. Have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.